Hi everyone, welcome to my channel, The Financial Outcome. Learning how to save money is something that we all need to take seriously in order to be financially responsible. Financial responsibility is the process of managing money in a way that is productive and works in the best interest for us. It's important to be able to pay our bills, save money, and invest in ourselves. There are a few things we can do right now to get started on the right path. Here are 10 tips that will help us save money in 2023. 1. Reviewing our finances. A good way to save money is by reviewing our finances on a regular basis. Reviewing our finances on a daily or weekly basis allows us to be sure that we're not spending more than what we have. This helps us to plan for unexpected expenses and gives us an opportunity to make adjustments if needed. 2. Track our finances using Mint or QuickBooks. In case we don't have time to review our finances on a regular basis, there are a couple of tools that can help, such as Mint and QuickBooks. Mint is a free personal finance tool that allows users to track their spending and savings goals. QuickBooks offers similar features, but with more advanced features like budgeting and forecasting. Both tools are available on the web as well as mobile apps for both Android and iOS devices. These two tools are just a couple of ways to keep track of how much money is in our wallet or bank account. 3. Establish a budget. Creating a budget will allow us to understand where our money is going each month so that we can make changes where needed most, like paying down debt or saving for retirement. Keeping track of our income, expenses, and savings helps us in working towards financial stability. Even if our budget isn't perfect, having one will help us to stay on track with our savings goals so that when it comes time to pay off our debt or invest in retirement accounts, there won't be any surprises left behind by defaulting on payments or skipping out on investing altogether due to unforeseen circumstances. 4. Buy used instead of new. We can save a lot of money by buying used items instead of new ones. This applies to everything from clothes and furniture to electronics and cars. Buying used items is environmentally friendly as it does not contribute to pollution and waste disposal in our environment. If we want to keep our costs down and still get the same quality of product, buying used is the way to go. 5. Create an emergency fund. Creating an emergency fund, in my opinion, is one of the most important things that we can do to start our financial lives on a more solid foundation. An emergency fund is a reserve of cash that we have set aside that can be accessed quickly when unexpected expenses arise. Depending on our income and living expenses, the idea is to have at least 3 months' worth of living expenses set aside for car repairs, unexpected bills, or medical emergencies. This fund will give us peace of mind knowing that if we need to leave our job or unexpectedly move to another city, we can cover basic expenses without having to worry about where the money will come from. We don't want to be scrambling when it comes time to move because you've spent all of your savings on a house or car and have no money left for emergencies. With this emergency fund, the expense will be covered and we will stay within our budget. 6. Pay down our debt. There are a couple of ways that we can reduce our debt. One way is to pay down more of our debt by paying more than the monthly minimum payment. Another way is to pay more of our debt down faster, if able. The first is easy, but the second requires discipline and planning. If we can't afford to make a $100 payment every month, then write a check for $100 and use that as an extra payment on one of our credit cards or loans. We may not break even immediately, but over time, we'll see a reduction in interest charges and the debt itself. We can save money by paying off our debt faster than it grows. This means that if we have $10,000 in credit card debt at 15%, then we should aim for paying off that debt in 10 years rather than 15 years, even if this means taking out a smaller loan or increasing our payments slightly each month until the balance is paid off. 7. Remove subscriptions, tempting marketing emails, texts, or memberships. Many people are tempted to sign up for something new or subscribe to a new service because they were too busy to do it before, but this can be a costly mistake. The best way to save money is by removing the temptation altogether and stick with what we know. Removing subscriptions, tempting marketing emails, texts, or memberships will prevent us from spending our money spontaneously. 8. Decrease unnecessary shopping / eating out trips. Shopping and eating out can be expensive, especially if we're not careful about what we buy or where we go. Think about how buying unnecessary items or going out to eat doesn't benefit our financial goals. Coming up with an alternative plan such as grocery shopping in bulk, or even better, make our own meals at home so that we can take advantage of the savings of cooking at home and eating out less often. 9. Open a high-yield savings account. If we find ourselves constantly spending money on things like coffee and cable TV, then opening a high-yield savings account might be just what we need to start saving more money for the future. A high-yield savings account is an account that offers a higher interest rate than a traditional savings account due to their stable earning streams. A few high-yield savings accounts would be Ally, Wealthfront, and Discover. Some benefits of some of these accounts could be no monthly fees, no minimum balance requirements, no overdraft fees up to a certain amount, various forms of loans, and access to additional insurance coverage, such as life insurance or disability insurance. 10. Invest our spare change into a corns or stash. Investing our spare change can be a great way to save money. The trick is to invest it in an account that will give us more return on our investment in the long run. For example, if we have $10 in spare change and we want to invest it, we could put it into a savings account paying an interest rate of 1%. This would earn us $1 over the course of a year. If we input that same $10 in an investment account with the same interest rate, it would only be worth $0.50 over the course of a year. In addition to saving our spare change, we can consider investing any other cash that comes our way like gift cards, money from unexpected sources, or any regularly scheduled deposits made into our bank accounts each month. When it comes to investing or any financial decisions, please keep in mind to always do our own research, as I am not a financial advisor and this is not financial advice. This video has been made for educational purposes only. Overall, I do hope that you enjoyed this video. Please feel free to like, comment, and subscribe.